Good morning, everybody. This is Dave Fry, ETF Digest with an ETF in focus. We're taking a look at a weekly chart of IEF, which is the 7 to 10 year Treasury Bond ETF. And we pointed out merely because the jobless report today, the unemployment report, showed only 74,000 jobs created versus 200,000 expected. That has a direct impact on bonds since obviously the report yields economic weakness and not strength. Bulls are quick to dismiss the report as a fluke or a weather-related issue, even though I think, honestly, as far as I can see, the weather was bad in January, certainly, and not so much in December. But that remains to be reviewed. In any event, it allows bond prices to rise and yields to fall, which is counterintuitive to all the chatter we've heard from bulls, the Fed, and analysts saying the economy was very strong. Well, it doesn't seem so by looking at this recent report. It also means that in 2013, less jobs were created than in 2012. And that also goes against the grain of common belief. So this weekly chart that we're looking at of IEF shows a relative strength indicator up here and our proprietary MACD histogram moving average, which was rising and is now rising once again, then fell and then is now rising once again. And a money flow indicator here. And these weekly price bars have two moving averages around it. But most importantly are high-low indicators, which you can see only some lows here, which means that the trend, the downtrend in this case, is exhausted. And you can see a good rally thereafter. Same is true going all the way back to June of the summer. We have a completed low here on June 28th, the week of, and therefore from that period forward, we've just churned around and without very much progress in any direction. The daily chart has the same annotations, but you can see that we had to have this big pop here this morning after the non-farms payroll report, and we would have to go all the way back to this high in October, and from which there was a very good call on the high on the daily charts, and from which we were ever descending. Now we had this incomplete low here, but if you were using a stop and were short, you would probably cover it with one of these breaks above the moving average after the low and the turn up in the MACD histogram moving average. There are many charts we could post today having to do with the remarkable unemployment report, but let's just go with this for now. If you'd like to see more of our detailed charts with actionable alerts, sign up to become a premium member at ETF Digest. Thank you for watching.